Hey everyone, welcome to The Explainer. I am so thrilled you're joining me today because we have a truly fascinating journey ahead of us. We're going to take these massive, high level global economic shifts that are totally dominating the headlines right now, and we're going to connect them directly to what you actually feel in your wallet every single day. We are looking at a world that feels incredibly divided. It's split right down the middle between this soaring macroeconomic euphoria on one hand and a much grittier, much more grounded microeconomic reality on the other. To really make sense of today's incredibly complex global news cycle, here is our roadmap. We're going to hit the 50K market tease, dive into geopolitics and global markets, look at governing the AI boom, explore dividends and crypto comebacks, break down the consumer price squeeze, and finally, we'll wrap up with a fun rundown of global oddities and trends. So let's jump right into our first section, the 50K market tease, flirting with historic milestones. Okay, let's dive into this number right here, 49,910.59. That is where the Dow Jones just closed. I mean, we're sitting just a hair away from that historic, deeply symbolic 50,000 mark. After finally shaking off that correction territory, it jumped over 600 points in a single day. And why? Well, it's largely fueled by this massive double dose of AI chip stock momentum. Take a company like Advanced Micro Devices, AMD. They just surged a whopping 19% on earnings, hitting a $687 billion market cap. This tech rally is literally pulling everything else up with it, but it definitely begs a pretty huge historical question. Let's do a quick side-by-side reality check here. Market technicians like BTIG's Jonathan Krinsky are openly comparing today's AI boom to the 2000 dot-com bubble. Get this. Today, the top 10 NASDAQ stocks are currently up an average of 784% over the last year. Now compare that to the absolute peak of the dot-com mania back in March 2000, where the top 10 were up 662%. Yeah, you heard that right. We are actually exceeding the euphoria of the dot-com peak. Now, obviously, today's tech giants have significantly better fundamentals than those startups from 1999 did, but we really have to ask ourselves, does the actual data support this modern party time, or is a massive hangover imminent? Let's move to Section 2, Geopolitics and Global Markets, where we're hoping for peace, but trading on sentiment. See, while Wall Street is busy partying, the foundation of this rally isn't just about microchips. Wall Street has actually been driving oil prices down, pushing Brent crude below $100 a barrel, strictly on the sentiment and the hope that the US and Iran are nearing a peace deal to end hostilities and reopen the Strait of Hormuz. But as RBC's Halima Croft points out so perfectly, it takes two to taco. All puns aside, experts are warning us that this is the fourth time we've seen this exact pattern play out. We see slumping oil and rebounding stocks, but Iran might actually feel that time is on its side. And if that's true, it means the market is pricing in a peace treaty that hasn't actually been signed yet. And we really need to ground this geopolitical data in human reality. 20,000, that is the number of commercial sailors currently trapped in the Strait of Hormuz right now due to the closure. These are real people facing falling bombs and dwindling supplies. They're relying almost entirely on just a few union reps, like Mohammed Arashiji, who is out there fielding thousands of desperate calls for help every day. It's just this really stark reminder that while oil futures trade on algorithms and pure optimism, the actual logistics of our global economy rely on people who are literally caught in the crossfire. Which brings us to our third section, governing the AI boom and establishing guardrails for the digital arms race. So the crucial point here is how society actually pays for the disruption that AI is causing. Enter this really interesting idea, the compute tax. Because AI operates on such massive processing power, there's growing public anxiety about job losses, the insane resource consumption, and the strain that these expanding data centers are putting on local communities. This proposed tax would literally target the core processing units of AI, the compute, or tax the consumption of AI tokens. The revenue generated would be designed to offset lost labor taxes and fund social services for people displaced by the tech. It's a fascinating attempt to basically price in the hidden costs of the AI boom. And this digital arms race, it's rapidly escalating onto the international stage. It's not just about domestic taxation anymore. It's a full-on geopolitical scramble. Both the United States and China openly recognize that powerful AI models could trigger crises that neither side is remotely prepared to manage. Because of this, Washington and Beijing are officially pursuing discussions to establish mutual guardrails. This is considered so critical that it's being heavily considered for the agenda at the upcoming summit in Beijing between President Trump and Chinese leader Xi Jinping. We are basically watching the real-time drafting of a modern non-proliferation treaty, just for code instead of uranium.
Let's shift gears to Section 4, Dividends and Crypto Comebacks.
So, with traditional tech valuations sitting sky high and AI regulation looming over us, how are investors adopting? Well, if you are looking for safe yields outside the tech bubble, you might be totally tempted by household names offering these juicy 6 to 10% dividend payouts. But wait, look closely at the numbers over the last decade. It's a classic value trap. Over the last 10 years, the S&P 500 has returned an incredible positive 324%. Meanwhile, if you parked your money in General Mills, you'd be down 20% in total return. Conagra, down 41%. Campbell's is down 54%, and Kraft Heinz is down a staggering 57%. A high dividend yield is so often a sign of corporate strain, and this proves that chasing those payouts is incredibly dangerous when the underlying company has just stopped growing. Now, contrast those really sluggish legacy food stocks with what is happening in digital assets right now. Bitcoin just pushed past the massive, awe-inspiring psychological barrier of $80,000. Absolutely wild. Analyst Tom Lee from Fundstrat is calling this a Bitcoin spring. According to Lee, institutional buyers are fundamentally changing their behavior here. They're going long on crypto, using it as a safe haven during all this recent geopolitical volatility we just talked about. He points out that historically, 3 consecutive winning months for Bitcoin, right in the middle of a bear market, that signals the definitive start of a new bull run. And for those looking beyond Bitcoin, Lee actually expects Ethereum to see even stronger momentum as the year closes out. All right, moving on to Section 5, the consumer price squeeze. It's time for Main Street's reality check. Okay, we've talked about multi-billion-dollar AI chips and $80,000 Bitcoins. Let's bring this macroeconomic narrative violently back down to earth. Here is the ultimate reality check. With the national average for gasoline crossing $4.50 a gallon recently, we're seeing the stark reality of wealth inequality hidden right in plain sight. According to the Federal Reserve Bank of New York, lower-income Americans, those making under $40,000 a year, have been forced to drastically slash their real gas consumption by 7%. Middle-income earners, they had to cut back by 4.8%. But households earning over $125,000, they cut their consumption by exactly 0%. None. They simply absorb that 19% jump in cost. This perfectly proves that inflation doesn't hit the economy evenly. It acts as a highly regressive tax that strictly punishes the working class, while the wealthy barely even flinch. And finally, Section 6, Global Oddities and Trends. Listen, if you've stuck with me through all that heavy economic data, you absolutely deserve a reward. Let's do a rapid-fire rundown of the most fascinating, bizarre, and entirely real global news items crossing our desks today. First up, public health authorities around the world are currently in this frantic mobilization to trace passengers who are aboard the MV Hondi's cruise ship. They are tracking down anyone who came into close contact with a rare rat-borne hantavirus that tragically killed 3 people on board. Now, the World Health Organization says the broader public threat is low, but the global logistical effort to track down these specific travelers is just immense. Next, we have a really uplifting but totally chaotic story out of rural Wisconsin. 1,500. That is the number of beagles that animal rights groups successfully negotiated to release from Ridland Farms, which is a commercial breeding facility. The sheer scale of trying to rehome 1,500 dogs has completely overwhelmed the tiny village of Blue Mounds. It has actually sparked massive national attention, pulling in political figures and major influencers from all across the spectrum to weigh in and help with the rescue efforts. Meanwhile, over in East Asia, we are tracking a booming and highly unusual cosmetic trend: elf ear injections. Doctors in South Korea are reporting that they're performing up to 20 of these procedures a single day. The goal? To artificially enlarge and point the ears. By making the ears larger, it creates the optical illusion that the patient's face is much smaller, which is currently considered a highly prized cosmetic trait in the region. Finally, for the sports fans out there, the value of winning the World Cup has literally never been heavier. Thanks to skyrocketing global gold prices, which recently hit over $4,743 an ounce, the intrinsic melt value of the solid gold World Cup trophy has surged a mind-blowing 3,000% since 1974. Today, just the raw gold in that trophy alone is worth an astonishing $746,811. Just incredible. Which brings us to the ultimate takeaway from today's explainer. We've seen a stock market flirting with unprecedented highs, driven by AI, tech billionaires printing money, and Bitcoin absolutely roaring back to life. But we've also seen a world where the working class is being squeezed right out of driving their cars. Global conflicts are threatening our basic logistics, and traditional safe haven stocks are plummeting. So I want to leave you with this to ponder. In today's highly fractured economy, are we really partying like it's 1999, or are the vast majority of us just paying for the party at the pump? Thank you so much for exploring this with me today, and as always, keep questioning the data you see.